This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Taylor from Life Goal Investments. How you doing, buddy?
Doing great. Let's do this. Let's talk REITs.
Yeah, so one of the things I love about this channel is I bring on millionaires with very different expertise, and you are my millionaire expert with 10 years of Wall Street experience. Thank you for that. You bring a lot of value to the channel. One thing I knew I wanted to talk to you about is Blackstone, and most specifically, something that's referred to as their B REIT, which is a private REIT only available to 9-figure accredited investors. We're not even talking my level. I wouldn't qualify for it as an accredited investor. And here recently, they got, I don't know, a lot of flack because they were, pulling an FTX, where they were eliminating withdrawals or redemptions, right? Just like FTX. Blackstone is like FTX, Taylor. They've stopped withdrawals. It's going to go to zero.
I'm about to really lay the hammer down on you on this one.
They're a Ponzi scheme. I actually heard that. So, but let's talk about it as a bigger picture. Let's define what really happened, and then let's just rap about it.
Yeah. So I actually think this thing is playing out exactly how it's supposed to. I'm surprised at how it's playing out, but it's playing out exactly how it was told to the market that it would play out. So essentially, there's about $60 billion in the fund. So that's a big number to begin with. So I'll break it down and say there's $100 in the fund. If at any point in one quarter, more than $5 from investors wants overall redemption worth of $5, they say, no, we're not doing any more than $5. Any more than 5% of the outstanding fund cannot be redeemed in one single quarter. Yep. So that's what's just played out. More than 5% was requested for redemption, and Blackstone said, time out. We're not giving out that much money. We've been very clear and concise about what this product is, and it's important that people understand why they do that. Yeah. So what they do here is they invest in real estate. And oftentimes it's in residential real estate, call it massive apartment buildings, et cetera. And so what they want to be able to do there is they want to be able to lock in long-term contracts and not have investors that get scared in a quarter force them to have to sell that property back to the market at a time when it's not opportune from a selling perspective. Mm-hmm. And so that's what we're experiencing right now. So let me shut up and make sure I'm clear on what I've said and just drawing.
No, it's funny because again, I don't own a lot of stocks. Blackstone is one of the companies I bought, and I bought more after this dip. And this was the reason why. Again, as an outsider looking in, what is this fund? It's a real estate fund. What is real estate? It's illiquid. Yep. Oh, by the way, these clauses, this 2% a month and 5% a quarter, big bold letters.
Yep.
Right. So all of this. To me, this thing was Blackstone being a good operator because, oh, by the way, they also have in contract to sell 49% of 2 casinos in Vegas, right? This stuff just takes time to close. Correct. And then the other thing that I said, and again, I have receipts so people can go back and watch it. I was like, I think this is more about not Blackstone, but the investors in the fund. Yep. And what I was saying is some of them are probably illiquid, and their other enterprises are falling, and they're trying to get capital anywhere they can. So they go to the best place, Blackstone.
Yep. And so what they said is actually the biggest part of this redemption is coming from Asia. Yeah. And so,
I read that after I said it, which was cool. Right?
Yeah.
I put it out the day.
Because your thought was then certified.
Somebody is in pain, right? Somebody's trying to survive. Yep. So they're like, here's the deal. Like when you get a margin call, you go to the most liquid thing. The strongest thing. Yep. So I assumed that this was happening. And then, Jeffrey Gray, I think it is. Jonathan Gray, I think, came out and basically said, hey, we saw a disproportionate rise in folks from Asia asking for their money back. So if you guys aren't paying attention, there's a lot of pain in Asia.
Yeah. And for context, why it's so surprising is the fact that, call it what you want. Usually people want to buy things that are doing well and people want to sell things that aren't doing well. The surprising thing is this year, that Blackstone product's up 9%.
Yeah.
9% the market when everything else is down 20%. Yeah. And so it's interesting. Now, one of the articles that I read prior to getting this information out of Asia, I kind of went to myself. I was like, this doesn't sound right to me. Because investors usually aren't that smart as a whole. And I don't mean anything bad by that, but let's call it.
They're emotional.
So what the article that I read prior to the Asia comment, which does make a ton of sense to me, is that people were selling private REITs, which are, again, this product's up 9%, and buying public REITs, which are down 30%, 30%. And I just looked at it and said, I think that
no
people are
smell
super
test.
comfortable if you're up 9%. They aren't going out there and then saying, hey, that asset down 30%, I think I'm smart enough to buy that when it's bottomed and have it pop on the other side. I'm like, I don't see that being the case.
Yeah. The other thing that, again, I'm so glad these videos are all saved. I have receipts. I actually said in the Blackstone's case, because they were the first, I'm like, I think this is more about their investors than them. But I did say, watch out, because the next tier and the tier below that, pain, blood in the streets, B-class assets, bad debt structures. There's going to be a lot of pain in REITs and private REITs. And sure enough, like 2 weeks later, Billionaire Barry was what I referred to, Starwood stopped. I'm like, Starwood might be a different example. I'm not sure I'm going to lump Starwood and Blackstone in the same sentence. So I think there's more pain coming.
Yeah, Blackstone, in my in my opinion, from what I've read about, it seems to be really well distributed across really good real estate areas in the market. The Sun Belt,
geographically, yes, types like operate or industrial and office and
office space is almost is extremely limited. So you know they've seemingly done the right stuff. It just seems that the market needed a dose of, okay, this is actually how this structure works.
Yeah, exactly.
You know, make sure you understand this going forward, because this is on every piece of material we put out.
Yeah, and then the last thing about Blackstone is, again, I've bought 2 of my 4 tranches of Blackstone. I will buy 2 more. When I look out over the next 5 years, I believe distressed real estate funds will have an amazing return. In my opinion, the best real estate operators that I have access to is Blackstone via their publicly traded stock. So I look forward to upping my position in Blackstone, because I expect them to disproportionately be the winner of any distressed assets.
To your point before in our conversation on the second video, there's going to be a wider dispersion in the winners and losers going forward, because the cost of capital is no longer 0. You need a solid operator in your corner to put up numbers.
It's about the operators. And when risk is 0, any idiot can make money. The idiot's about to lose, and Blackstone, in my opinion, is going to win.
And so one of the interesting case points, though, is the fact that people are now saying, hey, are you marking your properties correctly? You know, is that the difference between the private space where you're marking and the public space where it's getting marked by public perception every single day? And the interesting thing is their 3 most recent property sales have been above their mark.
Above their mark.
So it's like, you know, you can say and throw stones all you want. And I will throw another dart here and say, potentially someone that's wrong in this whole situation is one of 2 people. And I don't think it's the first one. So the first person could be the BlackRock salesperson, Blackstone salesperson. They have to talk about liquidity. They have to mention that. I don't think that they're not. I think that who's potentially at fault is then that financial advisor that has to turn to their client and then have to reiterate that message. Hey, if there's 2% requested a month, 5%. And I just think that game of telephone there, clearly something's been missed. I'm not sure who's at fault, whether it's the end client understanding at the end of the day.
You know, I actually don't think there's fault to be had here. Again, I could be wrong. The telephone game is dangerous. I think what happened is, again, this accredited fund, I will say it again, I don't even qualify for as a accredited investor. It's 9-figure minimum to get in. I think what just happened is you have some very rich people who got lazy in their investing. Risk was 0. They started moving capital. They probably levered up their personal balance sheet, and now they're getting their ass kicked.
Could very well be. It could not be. It could be not a lack of understanding. I'm just annoyed that this is being publicized as much. And Blackstone,
you know why?
Like rocks thrown at him.
Yeah, because anytime the shiniest trophy, people want to throw stones. That's all it is. It's jealousy. And again, I could be wrong. Maybe it's full of termites and it's going to fall to 0 and I'm going to lose more money. It's okay. It's happened before. But, you know, I've got 2 of my 4 tranches, and I'll pick up the next 2 over the next 3 to 6 months. So I'm okay.
I'm a long-term bull on that story as well. And we don't talk about individual stocks very often. I just like that
Yeah, I was
real
just
estate
curious.
space.
Yeah. Again, the beauty of for me is not about what Blackstone did the last 3 years. It's about what Blackstone will do the next 3 years. They're going to have the best cost structure. They are going to get phone. Who are you going to call? You're an operator of a Class A thing. The debt structure is blown up. You're going to wipe out your LPs. You're going to call like 5 people. Blackstone is one of those people.
Yeah.
So
Yeah.
I'm gonna have a lot. This is a lot of fun. Taylor, where can people find you?
Yeah. Find us at Life Goal Investments on Instagram. I appreciate you,
Awesome.
Michael.
Of course. Thanks, buddy. Take care.
Talk soon.